Do you want to achieve wealth and passive income through property investing? PK Gupta helps a community of over 10,000 investors achieve passive income by buying top 5% growth and simultaneously positive cash flow property using data, without wasting months doing research, spending weekends at inspections, or dropping $15,000 on buyer's agents each time. So, if you're overwhelmed with information overload but don't want to drop $15,000 on buyer's agents each time, check out PK's website, consultingbypk.com.au, and learn to build passive income through data. This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Okay, listeners, how you going? Phil Tarrant here. I am the host of the Smart Property Investment Show, my day job. Here I am the executive editor of Real Estate Momentum Media. I cover a whole bunch of different brands. I help steer the narrative and the direction of the content inside of property at Momentum Media. And for those of you, you're very familiar with Smart Property Investment. This is what we're tuning to. But we also have REB, which is Real Estate Business, which is the big media platform for the business of real estate, where we chat with agents, principals, property managers, and that whole professional community connected in with property. One of the big things at the moment is hard to get a hold of people because they're so busy either selling, transacting properties or managing properties. And that's just the nature of this particular market cycle. We're going to chat about it today. We've been chatting about it at length on smartpropertyinvestment.com.au over the last period of time as we've navigated COVID-19. We're recording this on the day after Sydney opened up, New South Wales opened up its borders to the world. The first flight arrived yesterday afternoon at about 5:50 in the morning out of Singapore. The second flight out of Los Angeles arriving in Sydney. No lockdowns anymore, straight out, no quarantine. We're getting back to business. But one area which really has been immune from huge COVID impact, and we'll get into it today, was the great state of Tasmania, which has run its own race through COVID-19. And for those of you who are investing or have invested in Tasmania, you're probably pretty familiar with the stellar growth that it's had out there. Again, we'll get into that today, plus a whole bunch of other issues which are complicating property at the moment. Joining me in the studio, it's a big guest today, the president of the Real Estate Institute of Australia, Adrian Kelly. Adrian, how are you going?
G'day, Phil. Thanks for having me.
Great to have you, mate. So you're recording from Hobart, the capital of Tasmania, and some say the best capital city in all of Australia.
Yep, who would have thought?
Who would have thought? How's COVID been?
Well, COVID's been great for Tasmanians, so it's almost been like a non-event. Like our Premier said, we have a moat and we used it to our advantage. So, but COVID and a property market, who would have thought that would happen, not just in Tasmania, but right around the country?
Well, some people would say nothing ever happens in Tasmania, except for brewing good beer. Okay, I've got to give you a hard time. There's a bit of rivalry. Are you born and bred? Are you born and bred?
Yeah, I'm born and bred. Yep, born and bred. And when I finished school, there was not much happening down here in Tasmania. So somehow fell into real estate. All my brothers and sisters left, all my friends and went off to other states. And now, surprise, surprise, everybody wants to come back to Tasmania and buy a piece of it. So we've gone from being the back end of Australia to now being the poster child for a whole range of reasons. Yeah,
hugely attractive place. And I love Tasmania. I think it's a brilliant place. And some of the islands around it, King Island, for example. I remember looking at property once on King Island. And if I could have flown directly from Sydney to King Island without having to stop in Melbourne, I would have bought it in a heartbeat. But it just reminds you how big Australia is. And, you know, we're recording in Sydney, you're down in Tassie, and Tassie's done really well, but you have a nationwide remit as president of the Real Estate Institute of Australia. Can you give me some sense of this? And people might not really know how this works. You have the real estate body of which you are the president, but there is an executive that sits inside of the REIA as well,
right,
who is their day job. You actually have a day job though. So you're a real estate practitioner, but you represent, I guess, real estate agents on the board as president of Real Estate Institute of Australia. Your business is View Real Estate. You've got about 7 offices right across Tassie. So that's a pretty big practice you have there in Tasmania. I imagine it wouldn't be too many other sort of boutique offices or boutique networks that size.
Look, I'm very fortunate and I've got some great people that I work with who let me do my Real Estate Institute job alongside it. So, but you're right, Real Estate Institute of Australia is the national body based in Canberra. It's been around since 1929, so it's quite an old organisation. And we are made up of the institutes of the states and territories. And we have a secretariat in Canberra, and a building, and that building is about 10 minutes walk from Parliament House, because a lot of what we do is talking to politicians and bureaucrats, because what they want to know from us is all about policy, suggestions that we have around improving policy, which policy should go out the window, and all of those sorts of things, particularly when it comes to the lead up to an election, which is what we're into right now.
Yeah, well, I was thinking it was going to be May of next year. What I'm seeing now is likelihood of March. I don't think they're going to call it this year. That's not going to happen. The Prime Minister's over in Glasgow at the moment. I think he's been in Rome and he's out there doing his climate change stuff, but not to happen this year, but for the REIA, of which you're a president. So the way this works is that presidents rotate through them. How long is your tenure, Adrian, in that position?
Look, it's a one-year term as president, and this is my third year of being re-elected, and my third year will finish at the end of this calendar year. And I think I'm ready to move on, Phil, and it's time for someone else to have a go, because in my 3 years I had a pretty hot election to deal with in 2019, where negative gearing and taxation on property was first and foremost, apart from franking credits, obviously. And then last year and this year has been COVID, particularly last year, which was a bit messy with lockdowns and non-eviction periods for tenants and a fair bit of uncertainty going around. But this year's probably dragged on a bit more than what we would have liked. But it'll be really interesting to see what happens in 2021 in terms of the market. Once we go back to what some people are saying, normality, we'll see.
Yeah, and if you had your time again, would you do it as president, considering that you had to deal with a pretty hotly contested election, but then also the coronavirus, which there is no precedent for? You've had to, no doubt, sort of find your way through it. Happy with the journey? I
would encourage anyone who works in real estate in Australia to have a go, and at the very least to get involved with their local institute, because it's a real opportunity to have a say in the way that real estate works in Australia. And all of us who earn a pretty good living out of real estate should be very happy to give a little bit back to make the property market a better place for those who come, once we finish off.
And this is a podcast, a very large podcast for property investors in Australia. Most of them resi, but there's a lot of commercial investors as well. Why would they care about or be interested in what the REIA is doing? Well, the 2019 election campaign is a classic example, isn't it, where property investors all of a sudden found that negative gearing was front and centre as an election slogan. It's difficult for property investors to have a large say, but for us, we manage most of their properties. So, in Australia, there's just a tad under 3 million rental properties, which house about 9.5 million Australians. So it's a sizable group of assets which we look after as estate agents on behalf of all of those investors. Like, just to give you a number, Phil, we collect $49 billion worth of rent every year on behalf of those investors. So it's not a small number. And when you look at real estate makes up about 13 or 14% of total GDP of Australia, which is obviously a very large number. And even if you look at sales, like the value of sales, and this is last year, not this year, when you take into account all the value increases, we sold $360 billion worth of real estate just last year in the 12 months alone. And that was in the middle of a pandemic. So there you go. It is considerable. And to give some sense to, and the question about what it matters for property investors, certainly 40% of GDP, that's a big number. And I'll probably get this number right. Somewhere about sort of 1 in 10 Australians are professionally connected in with property. It is significant. And you think about property being very much at the DNA of what success means in Australia, and we are a property economy. We've been driven forward because of and as a result of real estate. You look at our banks and how they sort of fared during the global financial crisis, the way they were structured and the prudent lending they were doing meant that they survived and thrived. Most Australians with superannuation fund has probably got money tied up inside those banks. Those banks make their money largely through lending out money to people for residential property. It's hugely interconnected. And to give some sense for that, the Real Estate Institute of Australia, you've been around for, you'll be cracking 100 years shortly. Do you get a seat at the table? Are you considered by politicians? Are you considered by regulators and those people that make the rules for how the economy sort of evolves in Australia? Do they ask you for your opinions and you actually have a voice to actually determine, dictate changes?
Well, I think the 2019 election campaign sort of speaks for itself, doesn't it? So, but the short answer is yes, and that's our role. It's not about demanding having a seat at the table. It's about wanting our industry to thrive. It's about wanting good quality, balanced market conditions, not only for us, but for all of our buyers and sellers. And the other thing too, Phil, is let's not forget that everyone needs somewhere to live.
Yeah.
So, whether it's an owner-occupier or a tenant or whatever the case may be, everybody needs a roof over their head. And I'm just pleased that we play the role that we do in making sure that happens. And that was particularly the case last year during the pandemic. Real estate agents and property managers looking after all of our investors' rental properties all of a sudden had all of this new legislation which landed in our lap around non-eviction periods, and we had to deal with it. And I was actually really pleased and, to be honest, extremely proud with the way that we managed that, because it had the potential to be a bit of a mess, but I think we managed that quite well in the end. So, I was pleased.
Yeah, how have the agents been? Have they been sort of banging down your door saying, can you give us some sense for how do we operate? Are we in lockdown? Are we out of lockdown?
Yeah.
Can we show people through an open home?
Well,
Can we not show people an open home?
It was worse than that, Phil, because as you well know, there's different legislation in every state, and the state premiers were running the show in every state, which was problematic for those agents that work across borders. But, it is what it is. I think, one of the main things about working in that pandemic last year was that we didn't get into whether tenants should be paying rent or not paying rent, and there was a fair bit of negative publicity going around at the time. We just got on with the job of doing what needed to be done. The problem for us was that we had tenants experiencing employment issues last year, but we also had our owners experiencing employment issues. And I think we should give some credit to the banks for the role that they played last year in terms of pausing mortgages and doing what needed to be done. And, thankfully, the whole problem around housing and in particular values falling, quite frankly, just didn't occur. So we should be quite grateful.
Yeah, well, I want to talk about the market. We'll do that in a moment, but we sort of chatting about the federal election, which is looming. Do you think they're going to be, do you reckon the opposition is going to be taking to the table as a policy agenda item removal of negative gearing? I reckon they've learned their lesson.
Well, yes, I think it's not so much about learning a lesson, and the Real Estate Institute and the industry for that matter have always been very open to sitting down and making improvements to the way that property in Australia is taxed. But the worst thing that the Labor Party did was to cherry pick negative gearing as an election slogan and run an election campaign around that, because that just scared the hell out of everyday Australians who might own one investment property. So I think we're still keen to have a proper, productive talk about tax, but let's put it all on the table, Phil. So not just negative gearing, let's put capital gains tax concessions on the table. Let's put stamp duty in particular on the table, because that's something that's just gotten way out of hand now. And where we need to make improvements to the whole tax structure, let's have a crack at it.
That sounds sensible. And I know you have at least in New South Wales, but a lot of the state-based bean counters are looking at a land tax and how they can change that and shape that, because there is an issue around affordability, and that's stopping a lot of Australians from getting in the market. And I guess that lends itself to the vision of the Real Estate Institute of Australia, what the future looks like for property. And I think attitudes have changed from, I think, my parents' generation. It was buying a house with a white fence out the front in the suburbs. You buy it, you pay it off over 30 years and then you retire, and that's about the extent of it. I think those attitudes have definitely changed. We'll get into that. We'll just go to a quick break. Back in a moment.
Are you ready to take your first steps towards financial freedom by investing in property? Maybe you've started your portfolio but need some help continuing to grow. Lachlan Vidler and the team at Atlas Property Group are here to help. As experts in property investment, Lachlan and his team are ready to help you take advantage of some of the best investing conditions in almost 20 years. By completing the research, sourcing and negotiations, Lachlan goes the extra mile to find you a high-performing investment and set you on your path to financial freedom. Book in your free discovery call today at atlaspropertygroup.com.au.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show. I'm chatting with Adrian Kelly. He's the Real Estate Institute of Australia's president. We're just musing around what's going to be happening with elections, but it's sort of got us to the point of reframing what property means for Australia. And Adrian, no doubt you can't go anywhere in Hobart without someone asking you, Adrian, what's going on with the market? You probably can't go to a barbecue without avoiding talking about property, considering your role. Mate, give me some sense right now for your attitude to property in Australia, and where do you think it's really going to go?
Well, I've been in real estate since I was 19, Phil, and I've never seen a market like this. not just where I live here in Hobart, but right around the country. We've got something like 530 local government areas around Australia, and almost every single one of those areas is experiencing similar conditions in terms of demand way outstripping supply, not just in terms of listings and sales, but also in terms of rental properties. And whilst, some might point the finger at us and say, you greedy real estate agents, you're doing so well at the moment, but I tell you now, Phil, we'd rather be working in a much more balanced market, because at the moment it's very, very difficult for young Australians to secure their first home. It'll be interesting to see what happens next year, but as at today, it's almost a near impossibility for them.
You must be giving commentary or interpretation around what will happen to different markets in Australia outside of your main capitals of Sydney and Melbourne as a result of the COVID pandemic, in the way it's going to change people, how they're going to work, where they work, the type of jobs that they have. The Prime Minister has been pretty clear about turning Australia into a leading digital economy by 2030. That means the way that jobs happen will change. I spoke about my parents' generation wanting a quarter-acre block with a white picket fence out the front. That's changed. What's your view, your vision, the Institute's view and vision for the future for real estate? Blueprint for the great Australian dream. Does that exist anymore? We're going to be a nation of renters moving forward. What's your sort of headline sort of thoughts on this?
Two things. Firstly, the shift to the regions, in inverted commas, which you just alluded to, is something that we were seeing in Australia before the pandemic came along. And that's people getting out of the larger cities, wanting to move to the country, have a bit more land around the family home, being able to work from home, so having good office space, having a few chooks in the backyard, solar panels on the roof, and living a much more healthy and sustainable sort of lifestyle. And then the pandemic came along and it just exacerbated it. Because what the pandemic did was it proved that we can work from home without any issues. We didn't break the NBN. And back then, moving to the regions was still very affordable. Pandemic came along. Any economist who could grab a headline between sort of March and May last year was forecasting massive reductions in values of property and all of that sort of thing. But we actually stayed very quiet, because what we could see in the media was being forecast was not what our members were reporting to us on the ground. In fact, it was starting to go the other way. So we stayed out of that argument, and then, Phil, now sort of the rest is history. But it's fair to say we've gone too far to the other extreme now. Talk about simple economics, supply and demand. We've got demand through the roof and we just don't have enough supply. Supply in terms of we haven't been building enough homes for the last 2 decades, but we've also got a large cohort of Australians who would normally take their property to the market, particularly more senior Australians living in family homes, and they're just sitting tight because they're too uncertain with regards to the pandemic. Plus they know that if they do sell, they'll find it very difficult to find something at the other end. So look, we've done a lot of work in the last 12 months at the Institute, and we pared back all of our policies and we put together a document which is called Getting Real, which any one of your listeners can grab off our website. It's a lengthy document and it's been presented to the federal government. But essentially there's probably 3 or 4 key things which need to happen. The first is that we actually need a national plan for housing, because at the moment we don't have one. And when I say a national plan, I'm talking about a plan which will get us through for the next 10 to 20 years. So not a plan which just runs for 1 or 2 terms of government. And that plan could ideally start at the federal level. Our National Cabinet during the pandemic worked pretty well by and large. So get all the premiers in the room, come up with the plan, have it flow down through to state governments, state and territory governments, and then let that flow through to local governments, because obviously there's some planning issues in Australia at the moment. Tax is a big one. And obviously we just touched on stamp duty, but tax as a whole, because, government's had 20-odd reports talking about how inefficient stamp duty in particular is. And, we've done a lot of work on stamp duty at the moment and just what it's costing, and now it really has ballooned out due to bracket creep. And thirdly, let's just make it easier for Australians to build more homes, because if we had been building more homes and it was easier to do over the last couple of decades, we wouldn't have the supply problem which we have at the moment, which is essentially pricing young Australians out of the market.
And can you take me back to that point, to what you referenced? And you said you didn't participate in a debate around it. And I remember it very clearly, and I'd like to think we were very measured on this podcast around it, when you had banks like the Commonwealth Bank and some of the other major lenders coming out saying there's going to be a 30% reduction in the value of people's real estate as a result of COVID-19, which shook Australia to its core because of what we spoke about before and the imperative of property in Australia around wealth and driving the economy forward and just the inherent value that it obtains here. When you sat there with the Secretariat within the REIA when this information was getting banded around, were you just going, it's just absolute folly, it can't happen, it won't happen? You took your position that you did, but was there any fear at all from the Institute's point of view around that?
Very much so. And the trouble with, forecasting is a mug's game, as you and I both know. You're better off to be talking about real numbers a few days after the event. But the trouble is the media picks up on these sorts of numbers. And in fairness to the Commonwealth Bank, their 30% fall in property values was their worst case. But the only thing the media picked up on was 30%. And thankfully it didn't get legs, because sometimes those things can become a bit of a self-fulfilling prophecy, because we're all humans and we all talk around the barbecues, like you say. But the big difference this time around was that everybody needs a roof over their head. And in Australia, the private property market provides around about 97% of those roofs that go over people's heads, and the government provides the other 3% in the form of social housing. So we sort of knew in that regard that we would probably be okay, and that was in March when the Commonwealth Bank threw that headline out there. And I felt sorry for the marketing department at the Commonwealth Bank about a week later, because it was almost at exactly the same time that the property market in Australia just took off. And that was largely fueled by first home buyers, because investors left the market because there was too much uncertainty. They were keeping their cash under the mattress rather than borrowing more money. Interest rates still at record lows. And all of a sudden that opened the door for first home buyers. And they had a wonderful time last year. And it was really the first home buyers which kicked things off. And then here we are today with investors back in the market with a vengeance in 2021, because we're almost at the end of this pandemic in theory. And it'll be interesting to see what next year brings as things get to become a bit more normal, hopefully.
Yeah, and sort of it's reverted back now. Everyone's discussing the challenges with entering the market. It goes back to this idea of the great Australian dream. I think a lot of people need to recalibrate their attitude towards owning property. It might not be something that's expected now for all Australians. It might be only a handful of people actually can do that, or the small majority of those Australians. But first-time buyers are struggling at the market. It's been exacerbated again through new APRA intervention to change the way in which banks view serviceability for borrowers. And I reckon the biggest loser out of that is first-time buyers who were struggling anyway. Great for them during that period of time. You had sort of this vacuum after APRA intervened last time to try and slow down investment lending, which slowed the market down, which there allowed first-time buyers to strike at that point in time in 2020. They had a good run for probably 12, 16 months. Investors are back with a vengeance now, as you said. What do you think the investors' sort of place is? Where do they fit into the current market? And you could speak sort of ground truth, what you're seeing in your own real estate practice, but also at a national level. Are investors fueling most of the growth that's underway right now? Partly. And, if you're an investor, Phil, why would you leave your cash in the bank at the moment? I mean, there's no point, is there? So you might as well put it into real estate. And at the moment, we've got rental vacancy rates in most jurisdictions around Australia of less than 5%. And then again, in most of the popular jurisdictions, that rental vacancy rates are 1.5%, so they might as well be zero. And that in turn has meant that rents have risen, and therefore, percentage returns on rents has been outstanding. What we are seeing right now is that investors are starting to look interstate. So getting out of, that they might live in Melbourne or they might live in Sydney, but they just can't find a property to buy, and then B, can't afford it anyway. So look at Adelaide, which last quarter experienced something like around 17% growth in investment activity, which is, quite a large number, to be honest. But as you say, the real problem is supply, and investors are buying all the properties that would in some ways usually be bought by first home buyers, and there's just not enough properties to go around at all. Even where I live in Hobart, for every one property that we put on the market down here, we could probably sell it 10 times over. I'm not exaggerating. And our average days on market here in Hobart City, our unofficial average days on market would be about 48 hours. And that sort of market is happening in many, many pockets right around Australia at the moment.
and it's simply because of supply. A, we haven't been building enough homes, and B, the normal amounts of normal listing stock which would go to market just isn't happening at the moment.
Yeah, and every market has its own sort of dynamics, but there's a lot of universal trends which are happening right now. But I'm selling a place myself up in the Central Coast, and I'll list it today and it'll probably be sold by this afternoon, purely because there's just not enough stock for the people that want it. And, property investors sometimes get a really bad rap. Often it's bittersweet, the impact of property investors. And if you think about Tasmania, you're attracting a lot more owner-occupiers now, but I would imagine, and you probably speak to greater depth on this, that a lot of the price growth that Tasmania has achieved of recent, and we're talking sort of probably 4 or 5 years, when the other markets were slowing down because of those 2017 APRA intervention, Hobart started firing, and a lot of it driven by property investors looking for really good cash yields. So that's absolutely bittersweet, as in property investors come in, they push prices up, which means it's harder for people to get into the market, first-time buyers. However, if you're in the market, it's a brilliant thing because your property is going up in value. What's been Tasmania's sort of overall acceptance of the property investors sort of coming in? And that's a really good microcosm of how it works. Are property investors lauded in Tasmania, or you like to chase them out of town because they make property unaffordable?
Look, it depends on who you talk to, because what is publicised in the media about property investors and property owners is very different to the conversations that we have with governments. And governments understand that they can't supply every single property for a tenant to live in. They've got to leave that to the private sector. So most governments are clever enough to know that they need to do what needs to be done to make it easy for property investors to provide that service. And most governments also understand that they don't want to force poor legislation down property owners' throats, which in turn turns them off buying these properties, because then governments would have a problem in where do they house these people. Silver lining is good for first home buyers, but that still doesn't help people who need somewhere to live in terms of renting a property. So I just make the point that even though there might be some negative commentary from time to time in the media, that doesn't necessarily mean that resonates well with governments.
Well, the government and governments, we're talking really at a state level, are highly incentivised for precipitating more property transactions under the current structure, because every time there is a sale, guess what happens? Someone pays tax at one end, potentially, if they're not owner-occupier, and then someone pays stamp duty at another side. So they're highly invested in the continued transactional cycle of real estate in Australia, and I can't see that changing, Adrian.
Look, most states earn something like 30 to 35% of their total taxation revenue out of property. And most of that revenue comes from stamp duty and then, to a lesser extent, land tax. And in most cases, land tax only applies to commercial properties and residential investment properties. So the trouble is, and the states are doing really well at the moment, because even though most of them haven't raised their stamp duty and land tax rates, property values have gone up. So the amount that's being paid by property purchasers and property owners has gone up. But rents certainly haven't gone up at the same rate, and neither have salaries. So there's this big anomaly at the moment, and we've reached that tipping point. Nothing sure from the conversations that we've been having with government, state and federal, the tipping point has arrived, because they just can't keep charging this amount of stamp duty in particular on purchases. We did some numbers the other week, Phil, with SQM, and at the moment in Melbourne and Sydney, when you buy a residential property, you're going to pay about 48-49% of an entire year's salary just in stamp duty. And if you're buying in one of the smaller regional capitals, like where I am in Hobart, you're going to pay around about a third of a year's salary in stamp duty. Now, that's just nonsense that's occurring. It's unfair. It's particularly unfair on first home buyers. And let's not forget that many of us who are real estate agents, we also have our kids that we want them to be able to afford to buy their first home as well. So it's time to have a proper conversation around tax on housing, in particular stamp duty, and to look for something, a much more broad-based tax, which is fair on everybody.
Yeah, I agree with you. Absolutely. That conversation needs to take place. I want to drill into that a little bit more. We'll just go to another break. Stay with us. Back in a moment.
Are you wondering where to buy an investment property right now? Why not let Buyers take the guesswork out of it? we can find you the right place on or off market at the right price. An investment professional from our national network of buyers agents can help you save time, money and stress and deliver you a tailored solution. Talk to us today. Call 1800 975 051 or visit buyersbuyers.com.au.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investor Show. I'm with Adrian Kelly, president of the Real Estate Institute of Australia, the body representing the property sector, changing the way in which the government looks at making the rules around property investment, talking tax at the moment. And affordability is a very emotive issue. Adrian, you spoke about, people concerned about whether or not their children are going to be able to get into the property market. And this goes back to this notion of what is the new great Australian dream? Is it what it was 50 years ago? I'd argue against it. You only need to look into Europe, for example, and the amount of people who are there's generational renters. You talk about 3% of the property in Australia is provided by the government, i.e. social housing. The rest of it is private. You're going to see this big charge, I believe, in this sort of build to rent type of scenarios that's moving into Australia. But the affordability issue often gets framed the wrong way, I believe, and that is property prices accelerating so quickly, therefore it's unfair to first-home buyers because downsizes, upsizes, property investors, they're manipulating the market, which makes it unfair. I would argue, and I'd like your views on it, that it is a structural issue. We touched on it before the break, that it's the property taxes surrounding property transactions which makes property largely unaffordable. You're talking about 30%, 40%, 50% of one person's income, annual income, to transact on an average or medium price home. That's absolutely bonkers. That removed straight away would stimulate so many more people into property who could start creating wealth through property. And you only look back through history in Australia. Property is a great way to build wealth.
Look, I mean, we should acknowledge that the government has done some good things for first-home buyers. There's the first-home super saver scheme and the first-home loan deposit scheme and all of those sorts of things. There's some stamp duty concessions in some states. But really, in the current market conditions that we're seeing, that's just tinkering around the edges. At the end of the day, if you've got to come up with $50,000 in cold, hard cash at the time of purchase just to be able to buy your first home, well, that's just ridiculous. And, we talk about the great Australian dream. Well, I'm not seeing it. If I'm a 25-year-old in Canberra or Adelaide, older Australians might say, well, do what we did and start at the bottom of the property ladder and save hard for your deposit. Well, it's nearly impossible for those people because wages haven't moved at all in the last 5 or 6 years. So I think you're right on the money, Phil. It is a structural problem, and state governments are addicted, in inverted commas, to stamp duty and land tax. And those state governments, with assistance from the federal government, really need to get their heads together and come up with a much better way, because at the moment it's just not working. And the Institute has been calling for quite some time now to find some solutions and come up with a much more broad-based tax scheme. And if you really want to dip your toe in the water, Phil, the most broad-based tax scheme that we have in Australia at the moment is called the GST. And let's not forget that stamp duty was meant to go out the window when the GST was introduced, but it never did. Now, raising the GST and removing stamp duty would be an obvious solution, but the trouble is governments who have a one-seat majority and heading into a federal election aren't going to touch the GST. There's nothing sure us. So we're stuck where we are, but structural, my word it is, but we're about to see a big uprising, I suspect, from the younger generation of Australians who are not happy because all they want to do is buy their first home just like their parents did. And at the moment, there's no way that they can do it.
Yeah, and I acknowledge, Adrian, the complexities of property taxes and also the way in which we're structured in Australia, as in a federation of states. We all have, each state has got different legislation around it, different rules governing it. And no doubt it feels like sometimes steering the national body is probably like herding cats to try and get everyone to see the world the same way at the same period of time to show a united front to help shape government policy, now sort of state and federal. And I think to federal, I think, the imperative of tax, people need to be paying tax. Tax is absolutely critical for Australia. And it's one of the reasons why we are growing and driving forward as a nation is that we do get those tax receipts because that pays for stuff, right? So we're not arguing the removal of tax at all. We're just thinking there must be a more appropriate way to do it. Now, there's a big sort of question around property moving forward, and that is, and you touched on it beforehand, we're not constructing enough properties in order to meet the demands of the population moving forward. And property is supply and demand. If there's more houses than what there is people that want to buy them, guess what happens? Prices become cheaper. Is the inverse the other way around. Borders have just opened up. We need to be driving immigration to support economic growth. There's going to be a whole bunch of people coming into Australia. How big do you think, Adrian, the disconnect's going to be? And where do you think the pressure point's going to be when we run out of housing? And that's going to unnecessarily, structurally, probably put positive pressure on prices again, which again sort of impacts the affordability question.
Phil, my gut feeling is that the current market conditions that we've got are going to continue into 2021 and probably get worse, depending on how you look at it. We've got massive demand at the moment, and that's demand with borders still being closed, although they're opening, but you know what I mean. We don't have immigration at the moment. Next year we will. They'll all need somewhere to live. Low interest rates are likely to remain. And the ABA has said 2024 or thereabouts, but even if they bring their time frame forward a bit, it probably won't make much difference. And the supply problem hasn't gone away. So when I say supply of listings, as we call them, so established homes coming onto the market, but also supply of building new homes. And as you just said, over the last 10 to 20 years, we just have not been building enough homes in Australia, and we certainly haven't been building enough homes that people want. So I suppose it gets back to having some sort of a plan, doesn't it?
Plans are important. Luckily, we've got institutes like yours to try and pave the way. And, we spoke about skilled workers, skilled migration. I think they're going to be putting the flag up saying we need to be underpinning the construction industry. Good luck trying to find a tradie just to go and fix your taps at the moment in the established property, let alone build a new one. So I think you're going to see an influx of those skilled workers come to Australia to support construction. We are a construction economy as well. Infrastructure is where the government likes spending their dough, and rightfully they need to do it. But there's also another sort of intersection with this. I'll close with this discussion, Adrian. We're speaking about sort of taxation structure to support the evolution of property. Sort of attitude towards innovation inside of property. There's a lot of antiquated rules which still govern property, which I think could largely be removed with the emergence of technology and some pretty smart tech out there. The government seems reluctant to really pave the way around it. I think they're starting to get the message. The Treasurer came out a couple of months ago going, we need to innovate. How long do you think the lag's going to be where the government can really capitalise on the tech out there now to make property work better?
It's going to be up to the industry to drive it, to be honest, and rather than waiting for government to head us down that path. And that was the interesting thing last year, and to a lesser extent this year, is that during lockdowns, estate agents were very quick to jump onto technology, and all of this technology was sitting there right under our noses, and we weren't using it. And, I'm talking about virtual inspections and online auctions and all of those sorts of things. It'll be interesting to watch things like blockchain technology down the track, where data can't be altered, and once it's there forever. Electronic conveyancing is a big one for us because we still have some solicitors who love to write out checks. But I suppose the answer to your question, Phil, is that we've got to drive it ourselves. Technology is great for our industry. And, at a basic level, just look at how many properties we've been selling sight unseen to expat Australians living overseas. And now that they can get a seat on a flight, they're all coming home. They're all coming home, and we've sold them all these thousands of properties and they haven't even looked at them. And it's all because of technology. So I suppose that's a really good example.
Yeah, technology is evolving by the day, but let's be clear, this technology has existed for years. The fact that, IDing people now, even think about the mortgage transaction, which is connected in with the property markets, you actually had to sit there in front of a mortgage broker or a branch manager and had to eyeball you and look at you. Now it's all done digitally. It's taken COVID-19. I guess is one of the positives of the pandemic, putting the impact, the health impact and the economic impact, is that it's changed the way in which we view things. I was pretty vocal during the first round of COVID when it sort of first hit, and the government moved in really quickly with JobKeeper incentives, which I thought was really smart. That was a good bit of policy, a bit around the edges, a bit grey, but, by and large, the intent was right. But what it clearly showed to me, was how quickly the government can move when it needs to move.
Couldn't agree more.
The industry has moved quickly to embrace technology, and I'm obviously very pro technology inside of property, but I think it does need to be industry led, and it needs to be led by like most things in property, we should be putting the consumer first, the customer first, whether it's the buyer or the vendor. That is the principal person in the transaction that technology should be supporting. Shouldn't be supporting the government, should be supporting that. Because if that works better, guess what happens? You get more transactions, you get a more stable property market, and everyone's happier around it. A lot of stress in property. People often, you must see it, Adrian, in your own practice, just the mental stress and toll it can put on people during operating these transactions. So technology can help with a lot of that.
Well, the stress has been particularly acute amongst our property managers with what they went through last year. There was a fair bit of mudslinging in the media between tenants and property owners, with the property managers stuck in the middle. And we've got this problem now where we estimate we're about 10,000 property managers short right around Australia.
Hang on a second.
Yep.
10,000 property managers short.
Yep, that's right. So we could recruit 10,000 property managers right now and put them straight into jobs tomorrow. So one of the things that we have finalised or just about to finalise is a submission to the federal government around job creation in the property management sector. And it's going to target those sorts of industries which have been hardest hit, such as airlines, hospitality, particularly looking at older females.
Perfect for property managers, those type of people who've got the skill set there.
That's exactly right. And, the submission we're putting in is many, many millions of dollars of federal government funding, which we'd like to support us to roll this program out. And I know I'm getting away from talking about technology, but this is something which is important to estate agents, and it's also important to property investors because property managers are worth their absolute weight in gold.
Agree.
And if we haven't got enough of them, then we've got a problem.
I want to pick that up, mate. Let's follow that. And I reckon we'd benefit from getting you on the show a little bit more regularly, mate. That's quite a wide-reaching discussion. I feel a lot more informed around it. So thank you for sharing your insights and the great work that the REIA is doing. We are a podcast for property investors, and guess what? We're working hand in glove with you and your team and your objectives because we just want a better environment for creating wealth through property. So thank you for this, what you're doing, Adrian. It's really good to chat.
Great conversation, Phil. Yeah, thanks for having me. Most enjoyable.
Nice one. Adrian Kelly, if you sort of want some more info about the Real Estate Institute of Australia, just Google them. Go and check out their website. You'll see also that there's representation at the state level. There's the REIV and REINSW, etc. Go and have a look at what they're doing. They've got some really good executive and secretariats inside those businesses as well. And they're always, and those associations as well, they're always ready to have a chat with you. So they can also point you in the right direction if you need support or help in advocating better property outcomes. Smartpropertyinvestment.com.au. Go and check us out. Social media, you can just search Smart Property. Will be there. One thing for me, a favour, please keep those reviews coming wherever you listen to this. Most of them on iTunes. It's just not me having a chat behind the mic. There's the people that do all the heavy lifting with this podcast. They get a real kick out of it. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.